Oh, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, just a quick comment today. What we're seeing in the metals markets is the metals stock. So GDX, GDXJ bouncing a little bit as gold is relatively flat again. GDXJ is up about 2%. GDX is up about 1.25%. But overall, what we did see was the stock selling off and gold not doing much. Now a little rebound in the gold stocks. Anything more to read into this?
No, I think for the most part, with respect to the stocks, I mean it's an oversold rebound. I mean the stocks were getting so oversold. I've been expecting a rebound for a couple days. We did have a hedge, and I sold that apparently too soon. Looking for a rebound because if you look at GDX, for example, I think it was down 9 days in a row as of yesterday. And I think the same could be said for GDX. So the sector was getting extremely oversold on a short-term basis. The breadth indicators I use for the last few days for GDXJ, and I track the top 33 stocks, 0% of those closed above the 20-day, 0% closed above the 50-day. And for the Huey, 0% closed above the 20-day, only 5% closed above the 50-day. So when I look at those types of readings and I go back over the last 4 years or so, there's basically a pretty good sharp bounce when the market gets that oversold. And the only comparable to where we are now, or the most comparable, I should say, is the summer of 2016 when we made that top, because that's when on a long-term basis, the sector wasn't oversold, but as it had this hard correction, it got extremely oversold in the short term. And so we've kind of seen the same thing now, where the stocks they were able to climb above the 200-day, the 400-day moving average. So a lot of stocks were in decent shape until this correction started, and now they're not. If you're looking at the percent that closed above the 200-day moving average, that figure is like those figures are 43% for GDXJ and 65% for the Huey. So on a long-term basis, the stocks are not that oversold. The other thing to note is GDX yesterday and today, it did come down. It has a gap right by the 200-day moving average. So in the last day or two, I was thinking, we'd probably fill that gap and then test the 200-day and rebound. And I don't know if we filled the entire gap, but it looks like aside from that, that's happening. So I would look for, I don't want to say like a really sharp bounce, but we should probably see a few more days like this where we get strong days. And gold, Corey, is interesting because gold broke 1280, but it really hasn't been doing much since then. It's kind of been trading in the 1270s. I wouldn't say that's necessarily encouraging because I think if the stocks are going to try and test these lows and eventually trade lower, that would suggest to me gold is probably going to go lower eventually. So even though gold is in the 1270s and the net speculative position has come down to 17% as of last week, that's kind of encouraging, but it's way too soon to say, this is a false breakdown in gold, and we're going to see it, make this big rebound back to 1300. I think for the most part, this is just a short-term bounce. A lot more has to be proven for that not to be the case. If you look at the price action in GDX and GDXJ, they've made these rounded tops, these bearish topping patterns, and the downside projection, I have one for GDXJ, which I think is 27 and 2750, and then there's also a projection down to 26, the low from last year. In GDX's top projects down to 1950, GDX bottomed, it looks like somewhere in the low 20s. So technically there are patterns that project more downside here. Look at this as just a short-term rally. A lot more has to be proven if the market's beginning some larger move higher here.
Yeah, really, it just continues to be a range-bound trade, and unfortunately, that peak in February, let's say, could very well be the high for the year, at least the high for the metals for a few more months. Hard to say, but right now, yeah, just a very much range-bound trade. Let's also discuss the fact that the U.S. dollar is also breaking that recent high that it put in just about a month and a half ago. What's the significance here, though, Jordan, as the dollar is moving higher and gold is still boring range-bound?
The dollar is really interesting, Corey. I mean, technically it's trading in a bullish ascending triangle pattern, and it looks like it's on the cusp of trying to make a big breakout here. That obviously, the significance of gold not moving lower that much is that, relative to foreign currencies, it is performing better, which is good, but I don't think there's anything that significant. There's not like a real significant positive divergence there. I think, I have a unconventional view on the dollar, I think a rising dollar would actually be better for precious metals, because a rising dollar would create the conditions that would force the Fed to have to cut rates. But I'm not, I would be on guard for a potential false breakout in the dollar. I mean, it technically it looks like it's on the cusp of a breakout here, and it could break out and maybe run higher for a little while. But the interesting thing, Corey, is if we're seeing stabilization in the global economy, and if we see some data start to strengthen just a little bit. Remember, markets move on the margin. News doesn't necessarily have to be good. We've been pricing in bad news, not great news for the economy. And so if we get some stabilization and we start to see some data that just strengthens a little bit, and I should take a step back and say global equity markets, that's what they're really projecting, because we've seen strong moves in equity markets. The S&P is at a new all-time high. Global equities are doing well. It does not, it looks like they have more upside. Their rebound doesn't look like a corrective rally. So looking at those things and looking at the potential for the global economy to stabilize or maybe outperform low expectations, that's the kind of environment where I think we'd see a weaker dollar rather than a stronger dollar. So I would just keep that in mind. I'm not so sure that this pending breakout in the dollar is the start of a massive move higher. I would just be a little sure in the short term. If it breaks out, it's probably going to run higher by a few more points. But I would not be, given where the global economy is, I'm not sure if this is the start of a huge move higher in the dollar. But again, technically it looks bullish for the short term here. So I wouldn't, get in front of a breakout and try and make a trade that it's going to have a huge reversal and breakdown. I'm just saying keep that as a possibility in mind, because the global economy to me is with the way it looks, that's suggesting that the dollar at some point is probably going to get weaker rather than stronger. But look, we have to respect the tape, and the tape says in the short term it's probably going to trade higher.
At least right now it does. That is correct. But Jordan, do you think we're entering this scenario where, as you said, it's all about how the market is expecting things to play out, either economic data-wise or also how the central banks are going to do things? We heard so much chat at the tail end of last year, even beginning of this year, that the Fed will be cutting rates, not hiking rates, sooner rather than later. But now we've seen some market rebounds, especially in the U.S., and also some slightly better economic data. Do you think the market now needs to swallow the pill of maybe we'll just have the Fed and a lot of other central banks on a holding pattern, even though it's a dovish holding pattern, still more of just a holding pattern rather than making any actual cuts?
Yeah, and I think this is the fundamental explanation for why precious metals, the stocks at least, why they've made this topping pattern, and why they've had this technical breakdown, because if we go back to the beginning of the rally in precious metals towards the end of last year, the Fed, I believe the market was thinking that they might hike 2 or even 3 times. Again, if we go back to not late last year, but last fall, the market was thinking the Fed is probably going to hike 2 or 3 times. So we went from 2 or 3 hikes to at the tail end of the rally to actually the market expecting 1 cut in the next 12 months. And, what's happening? We're seeing the unwinding of that trade. And Obviously, if precious metals rallied on the Fed moving all the way to actually cutting rates, and we see stronger equity prices, we see stronger data, that trade is going to unwind because in that kind of environment, the Fed is not going to be cutting rates. As you said, they're mostly going to stand pat. I mean, it could be a dovish pause, but it doesn't seem likely to me that if we see the stronger data, I should say, and stronger equity markets, it seems highly unlikely to me the Fed is going to be able to cut in that environment. So as I said, that trade is unwinding. That's what's hurting precious metals. And so eventually for precious metals, then it turns, eventually will turn to, is inflation if the Fed's standing pat, if inflation is rising enough, then at some point that starts to be bullish for precious metals. So I know it's confusing. With respect to precious metals, we're seeing the unwinding of that rate cut, low rate trade. And, at some point, whenever that's fully unwound, the market will then, around the same time, turn its focus to, oh, well, the Fed's not doing anything. Inflation is rising. That means real interest rates are going down. That's bullish for gold. So that is kind of a fundamental catalyst that, but that I think is going to be later this year. It's not like a next week or a next month thing. But that's just something to keep in mind for precious metals investors and traders, because the trend is clearly bearish here. We're probably going to see lower prices over the next couple of months, but we don't want to get too bearish given the potential for rising inflation while the Fed is standing pat.
Okay, so right now it still sounds like not the time to get over aggressive, but there are some developments that need to happen outside of just the metals sector to truly drive these metals prices higher, and even the stocks. Jordan, good chatting with you. Thanks for taking some time, and have a great rest of your week.